Here's a story.
Dun, 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 dun. Oh, hey guys.
A lovely
Hey,
lady.
this way.
Oh, there's a lovely
Look
lady.
straight.
Wait,
Leave
there's
your
no lovely
brothers and
lady.
sisters
I was lied
alone.
to.
Well, let's just say brothers.
Yeah.
Welcome to the all new for this week. Anyway, we've got all
Wait,
four.
so
We
is
have to
this
welcome.
women and a baby?
Who's the baby? I usually am every week. I'll admit that. I'm the baby.
Yeah,
I
baby
act like one,
face.
even though I'm the oldest. We've got the youngest. That's the baby, I guess. The Asian baby over there. Yeah. Which, by the way, guys, if you didn't remember, this is actually a guy named Daniel Hopwood. He actually decided to join us this week. He faked like his technology wouldn't work for a long time just so he wouldn't be here. And now he's here because he wanted to sleep instead of do this. And we got
actually it was so fun to wake up at 4:30 in the morning and then troubleshoot this for an hour for weeks.
That's right. That was always fun. Encouragement. All right, and then we got Royce Wells, Mr. Tinfoil Hat. Thank you, my brother, in that respect. Down at the bottom. And he's also the founder and the author and the script writer of the code for our AA bot Pips. And then we have the evidently on vacation with his Hawaiian shirt or whatever that is, banker, Mr. JP Morgan or Josh Morgan. So welcome, everyone. Glad you're here. This is After the Bell by Arbitrage Trade. And I'm still in my parents' basement, whatever. So what? I'm tired of saying that every week. All right. We are not financial advisors, and this is not financial advice. This information provided is surely for educational purposes only, maybe times 4 now. And please always consult an investment professional before making any financial decisions. And we will get started here. So, markets, what is going on? It looks like, is it ever going to turn the other way? Is it going to go back the other way? You got all these bears now and all these people putting in shorts. Are they going to get their butts kicked because it's going to keep going up? Or is it going to come back down finally and act normal for once? Royce, what do you think?
Well, the title of my Sunday seminar was Whoa, Whoa, Gravity. So you know where my heart is.
Gravity.
Top heavy. Things looking extremely top heavy. And the S&P 500 is basically trying really hard just to hold on to $1 each day. So with that being said, volatility is shrinking. Anytime volatility shrinks, that's not good unless it can do it for about 3 or 4 weeks. If it can do it for 3 or 4 weeks, guess what? We will get another uptrend. But if it can only do it for about a week or so, yeah, we're heading down.
All right. It's going down. All right, we should do music all over through this whole thing. Also, I would call it the Dolly Parton market right now.
Uh-oh. Where's Miley Cyrus?
Can you figure out why?
We're not talking about that.
It's top heavy. All right, we're gonna.
I was like, I have no idea where Darren's going with this. I don't know any of her music.
Where does Darren usually go? No, I'm just kidding.
The second word is up. That's all I got.
All right. Anybody else got anything on just the market? Kind of something you want to add in real quick before we run on to the next?
I mean, it is something year. All the bears are coming out, but it's an election year. We might see that usual drop in August. It typically happens every year, but I can see this riding out till in November at least.
Yes, like everything right now. Everything's just getting pushed past this administration so it can affect future generations. All right. So anyway, tinfoil, I have it on. Daniel, you said something about it being the it's best first half, or it's on track for that? Since
best it's on track for the best first half performance in an election year going back to 1976. And I'm kind of on board with Josh is that, I think, to Royce's point, like volatility is shrinking, and I think you'll get kind of the summer slump, whether that's, a small 5% correction or just kind of, stagnant market over the next, maybe 2 months or so. But, I see it, maybe it doesn't continue to rip to the upside like it has in the beginning of the year, but, election year has performed super well. And with things being so crazy, unless, some true war kind of escalates, like it's, you know, probably up in the long term, but, you know, definitely probably needs a little cooling off in the shorter term.
I'm going to put on my tinfoil hat and say that it's going to crash right after the debate Thursday.
Interesting.
Define crash.
Yeah,
5 to 10%, like you said, nothing crazy.
Okay. A correction.
We could have a correction. That's perfectly fine.
It's not a crash.
But
yeah, we need 20.
They'll blame it on the debate, and then and then we'll continue on.
We won't get into why they might blame it on the debate. Speculate on that.
They can make whatever reason they want. They're just we had technical difficulties.
Whatever they want, or whatever they. Is it whatever they want, or whatever they plan? Okay. Well,
yeah, this doesn't matter. Doesn't matter.
So 20% down is what the market needs to do to actually get healthy again, in my opinion.
20%,
to take its medicine.
So much.
It needs 20% down and then come back.
Statistician over here. Come on. Back those numbers up, brother.
Darren, we both know your positions don't need that.
They've been no, that's not true. We're inverse, but let's keep going. Maybe that's why I'm saying that. They need to pay their freaking stocks bought but not yet purchased. It's a huge number. But anyway, let's move on.
We're already at T+1, right? Or is it T+0?
It doesn't matter. They're still holding on to those. They have not paid up. All right, so we're going to go into I can say that and just move on. Sector rotation. So there is a thought process that because we have a day of stock rotation, that which is what they do. They'll have one day of stock rotation, then go back and dominate the tech. Will dominate the top, and then they'll say, "Look, we had a rotation." But anyway, that's just my personal viewpoint. Daniel, you brought this up. What say you on stock rotation? Are we really rotated or no?
Yeah, I mean, overall, I think there's disparity of it's, went from, I think we talked are going to talk about this on our deep dive, that it went from Mag 7 to now it's like the top 4. And really, a lot of it is, kind of NVIDIA until recently. And so does one day make it a, new trend? Definitely not. But at some point, things Royce has talked about before, things are like a rubber band. When they go way out of bounds, they have to come back eventually. But, I think a theme of a lot of what we talk about is when do the chickens come home to roost? And it seems like not anytime soon until it finally happens. But, I think it is a little, I hate to be the guy that says it's different this time, right? But technology is more of a prevailing factor in the markets, and they are more proven business models than they were 24 years ago when they tanked. But at some point, things got to come back a little bit.
Yeah, I've heard just
they got to slow down, and things they got to speed up.
Yeah. Yes, they've been prepping.
History doesn't repeat itself, but it often rhymes.
Oh boy, and there's that other saying he always says. But the whole it's different this time. Okay, it is different, and that's why it's scary, because all the other reasons it's different. Let's move on to, we got like a combination of 2008, 29, and I mean, and the .com and everything all at once, and the real estate, everything's going on at once. Fire. All right, Royce, jump in.
Well, easy enough. To Daniel's point, right? You can only go up for so long before chickens have to come to roost, right? That's almost a true statement. Statistics and probability proves that basically, and even the arbitrage band system proves that if you can maintain the same speed, probability and statistics will go on indefinitely. Where everything changes is when the trend slows down or when it speeds up. If it speeds up too quickly, you basically hit the edge of the bell curve and you have to come back. If you slow down too much, there's not enough volatility for them to actually move. So literally, you have to have another big move either up or down to basically get probability to re-expand to continue going in either direction. So we shouldn't be afraid of a slowdown or a speed, or I should say we should be afraid of a slowdown or a speed up. But as long as it's business as usual, this thing can go on forever.
Yeah. I know you have. There's a comment about every 7 to 10 years, stuff like that happening, and is it planned?
This is a 14-year almost bull market.
Yeah, it's like it's way past due. I mean, come on, but so we'll just see. We'll see what happens there. Mr. Banker, you got anything to add there before we move on?
Nope, they covered it.
Okay, cool. We spoke what he wanted to say. All right, so we're going to go into the crypto flashbacks.
It's beautiful.
Dun, dun, dun.
It's so beautiful.
What's happening, Daniel? Where's it going? Why is it going? What's going on? Are they just taking the money out of Bitcoin and trying to pump up the markets and go back and forth? What's going on there, Daniel, Mr. Bitcoin Applehead?
Yeah, so the news of why it's selling off, I'm sure Royce will talk to us why that's not a necessarily true statement, is that Mount Gox, which was an exchange well before I was aware of what Bitcoin was, while I was still using it to buy fake IDs, was one of the original exchanges that people held their crypto on, and it got hacked. And this was a while ago. I don't remember the exact year, maybe like 2014. And a lot of that money, or I should say Bitcoin, was actually recovered and is going to be sent back to a lot of the original people that I got hacked from. And it was about 10 years ago, 2014. And it'll be about $15 billion worth of Bitcoin, which, Bitcoin has a pretty large market cap, but that's still a good amount of Bitcoin, is 740,000. And the fear of what's going on right now, of why Bitcoin's selling off, is because when everyone gets these Bitcoin after 14 years, that's a large appreciation, and that all these people are going to sell these Bitcoin once they get it.
That seems
now, Royce, tell me why this news is wrong.
All right, ready? Has nothing to do with that.
Okay.
So,
smack.
All right, let's talk about the SEC, right? Those guys.
Tennessee won the national baseball champion. Oh, not that one.
Yes, those guys.
Knew I'd get it in somewhere. Go Royce.
So SEC dropped their Ethereum case. They dropped their Ethereum case, basically allowing Ethereum to remain a commodity. That is a huge win for the cryptocurrency market. But that also may have spooked some of the investors who were using parts of their portfolio to back it with part Ethereum, part Bitcoin. If you spook the investors, they are the ones who are actually smart money is pulling out. I don't think it's the people who are about to get their money back, because basically it's still sitting at 60-something thousand a coin. Why would you sell it if you know that the last bit of Bitcoin is supposed to be mined at the end of next May? So it means the demand curve should spike. I don't see them selling. I just don't. At least not for that reason.
Yeah.
Now, the investors that basically, the institutional investors that try to back their assets with crypto, absolutely. They're like, well, things are getting scary, and you're potentially making it where these people can. Let me get while the getting's good.
So they back their assets up.
Yeah.
Sounds like a club. Back that asset up. All right. So I couldn't resist that either. I've checked what I'm drinking today. Mr. Banker, what you got going on over there about Bitcoin?
I think a lot of it is, obviously the news is spreading the fear mongering, and so I'm sure that's contributing a little bit to the sentiment. But it's also, a lot of it's kind of blown out of proportion, because as I understand it, the way the bankruptcy case in the German court is structured, I think, Dan, you said it was 740,000 coins that were stolen, but I think they only had to go off like previous valuations. So it's really only like 9 billion in assets that need to be returned as like a 1-for-1 kind of thing. And then a lot of those other coins are going to get sold off to go pay attorneys and legal fees and court costs and things like that. So really they're only putting, like, I think the number I read was like 140,000 coins that were actually going to be redistributed into the market. And when you consider there's like 2.5 million Bitcoin that are readily available for purchase right now, like, that's not really flooding the market. 140 for 2.4 million coins is really a small percentage.
Yeah.
So add to Josh's point, the current market cap of Bitcoin is 1.2 trillion. So even if it was the full 15 billion, pretty small.
Right. It's just a small percentage. I mean, it's kind of the news, and they're doing that avalanche and now fear mongering, and everybody's kind of taking it to heart, and it's contributing to the overall sentiment. But realistically, it's kind of it's just, what they're trying to accomplish versus what they're actually going to accomplish.
You want to know who this is great for?
Oh, this is beautiful.
Darren's favorite people.
Oh, this is beautiful.
BlackRock.
Oh, I thought you were gonna say Robin Hood.
Oh. No. The people that behind Robin Hood that made him stop,
Yeah, exactly. Well, BlackRock,
yeah.
Don't forget, my favorite 3 of all time is BlackRock, Vanguard, and State Street. Hey, and let's throw in an
honorable. Why you hate on Vanguard so much? They invented the ETF
because they own everything too. And then
John Bogle was a great guy.
We got an honorable mention for Susquehanna too. All right, let's keep moving.
Sacagawea?
Yeah. Let's. By the way, there was there was news today about the government putting their Bitcoin or their crypto into coin now, and there's a couple of, and I looked at coin's price, it didn't react any at all, but it looks like coin is going to get some validation here. Even more validation because the government's going to use them or something. I'm just giving you that to tease you. I don't have any facts or figures. I just saw a headline, so you guys can look that up after this bell. Oh. So, we have a loser of the week, and no, it's not BlackRock. No, it's not Robin Hood. No, it's not any of the mentioned ones I just said. But it's NVIDIA. So NVIDIA, I was riding Miss or Mrs. Who cares? It was riding high. It was number one. It
doesn't matter who you're riding when you say Miss or Mister.
Oh boy!
Just putting that out there.
No. It'd be funny if Opus clips, if that's the only thing it clips. That's the top clip.
I'll probably just do it for 5 seconds. Boom. Put it out there. But anyway, it was number one, and then it got chopped down to number 3 now. Daniel, is that what you said? Number 3?
Well, I think it's
where it stands
number
today or something.
2. I think Microsoft is number 1.
I think Apple jumped up, didn't it?
Oh, did it?
I think it went to 3, and I don't know if it's still there today, but I'm pretty sure it jumped down to 3 based off of what I read. So good point bringing that up. Is it going to bounce back though? We'll let the banker go first this time. What do you think? Is it going to bounce back? There's no wager on this time, so you can just say whatever you want.
I mean, yeah, you could certainly make an argument for it. But man, that's a tough one. That's a tough one. I really, that's a tough one.
As market crash, they're going to go right to that one first and get their profits. Yes, Royce? No, go ahead.
Well, I was going to say that, it'll bounce back, but I think they wiped out $500 million, half a trillion dollars off their market cap.
312 billion in 3 days of market cap.
That's going to be a lot to come back.
Not much.
Especially considering that a lot of the sentiment is that, they're overvalued anyways. If you look at them compared to, what they used to do with or if you combine all of the other chip makers, let's just look at, CPUs versus GPUs. If you combine the top, I want to say 5 to 10 companies, chip manufacturers, and combine their market cap, I think it hits 2-ish trillion. And yet somehow NVIDIA is worth nearly $1 trillion more than all of those combined.
Here, Josh, I have a fun stat for you. Okay. I believe this was taken from last week when it was at its peak. So NVIDIA last week was worth more than France's GDP, 16 Elon Musk's, every building in New York City, crypto's global market cap, and the entire US oil and gas industry.
Yeah. Yeah. There's some valuation concerns there.
You think?
Yeah.
So what was the one during the last crash? We got to get these two together. Was Cisco? I think it's being compared to Cisco, right?
Yeah, it's always the Cisco chart.
Yeah, but if you look at the market cap valuation for Cisco, it was way, way proportionally higher.
Yeah. Because this is different, right? That's what we're saying. That's the theme for
I'm just waiting for the corporate Congress.
This is different. There's no way. Don't run for the hills. Please keep your money in our banks because you don't have anything there. Royce, what you got? Anything to add to that? Or
For crypto, just in general, or
just Nvidia. Yeah.
Nvidia. I mean, that's what's literally on my screen here.
You want to do chart?
Oh no. I you want me? I can definitely do.
I can pull the. I can show the chart if you want. While you're doing it, remember, it don't have to do just one crayon. We can
dive in and out. So
we are now looking at your Nvidia, and we're looking at the awesome 12-band.
All right, so let's go over this. So let's first talk about that top that we had. That basically was last Thursday at about 11 a.m. We got dollar signs. We got a Z letting us know that we were even outside the infinity band, which is the biggest band in the arbitrage band trading system. It said basically it was saying take profit, get out of there. And the fact that it was that high, basically the infinity band is still sitting at 71%. So I mean, probability is still saying we should be taking profit at this point, not sitting around, twiddling our thumbs, hoping for 140 again. Looking at our dashboard indicator, it's looking at about 112.98, which means if you know anything about our system, these are mile markers that it must touch in order for probability to stay in check. Otherwise, it must accelerate quite a bit to basically pull that number up higher. So because of the split, yes, I think it was about 125 was where it split at, was the value of it on the day that it split. So we're right about the split valuation. But from where we are, it's saying that we need to go back down and see 112. So let me bring it down to that intermediate band just to show you guys real quick, basically why we're being forced to come back down to reality. So once we hit the top of this band, basically, typically when these lights come on the dashboard, the buy in danger, that means a mean reversion almost has to happen, which means if a mean reversion happens here, we're going to wind up somewhere near around $98 for the valuation. And then now if you're looking at the apocalypse band, bring this guy up. That's the second biggest to the infinity, right? Talking about that guy, same thing. Everybody was hitting the edge of probability, and a mean reversion here could be brutal for NVIDIA because that could literally take it down to about 67.44 before that 86.71 will turn itself off. That's all I got.
Wow. It goes to be said that in the past, those charts, and when you do them, are some of our most popular clips that come out. So anytime we get a chance to do that, and again, show off the algorithm that we have, I'm going to do it. I'm going to run over there and do it. All right. We'll move on here. I think we kind of touched about, no, we haven't really yet, about is it 08 again? I mean, I kind of referred to it just a second ago saying that, yes, I think it is, if not worse, with commercial. But let's start with Royce this time, and we'll work our way back. Compare this to 08. Is it close? Is it worse? Is it better? Is this okay?
Yeah. Yeah. So from where we are, and basically I'm going to put it in perspective because a lot of people don't see the perspective that I see when looking at these charts, right? About a year and a half ago, the Real Estate Investment Trust was literally sitting at almost 3,000 points on its index. In that time, in that year and a half time, it has shed literally over 20% of its value, but everything is still fine. Nothing to worry about. Everything is still fine. The Fed then raises the interest rate. And so basically the average American home used to be about a $200K home. Right now with the interest rate, no one can afford that now with the average mean salary, income, their take home. So is this 2008? I think they're handling it a whole lot better than they did 2008 because there was a lot of panicking and a lot of in the street people just going, they're basically saying, nope. It's like you don't yell fire in the theater. You just say, okay, turn on the lights and direct people towards the door. So basically the institutions, I think, are slowly exiting their positions, whether they're putting it in crypto, they're putting it in gold, they're putting it in other alternative. Even the bond market is popping just a little bit right now. So just from the real estate side, it's not quite as bad because they've figured out a lot since 2008 to basically allow different things like mortgage assumptions. As opposed to a mortgage refinance, there's now mortgage assumption programs and HELOC equity agreements, not loans. And so they've created new devices that they can pull and different levers that they can pull to basically allow people to calmly still make money as the economy continues on. Basically, let's talk about the .com crash, right? Everyone's like, hey, we're moving to the cloud. And the cloud just means basically we're no longer having things on premises, right? They were not ready. The internet was not ready. They couldn't support the bandwidth. So basically when it was out there, the infrastructure couldn't support it. But now there are things like Starlink, there's satellite, there's gigabit, there's 6G. There's tons of stuff out there. So I don't think technology is going to collapse at all. Maybe the demand for technology, because I think we are going through another not industrial, but maybe a technical revolution. With the inception of AI, people are trying to figure out how to use it and basically how to leverage it. And just like in 1992, 93, when we had our flip phones and our Nokia bricks, right? No one thought that we'd be using cell phones like we use cell phones. There'd be handheld computers. But so you introduce AI, that does create a brand new market for new people to tap into. So I don't think there's enough burning as opposed to new innovation. I think the new innovation is outpacing the burning, which is why people aren't seeing it as much. And the biggest thing that we have to get, or should, in my opinion, take from this is make sure that you are an early adopter. If you're an early adopter, you win. If you're constantly crying wolf, it's going to fall, it's going to fall, it's going to fall. It may not fall, and you may be the only one left holding the back.
Okay, that's why you're on the same side of the screen with the institutional guy with his comment. You did not mention, and I don't know anything about loan assumptions for commercial real estate, because that is the one that's lurking in the depths.
No, that's the beautiful part. Companies would rather assume other people's notes. So, like, literally, I've seen, because I've worked for some of these companies, like AutoZone worked out a deal for downtown for their building. That used to be the Macy's / Goldman Sachs, not Goldman Sachs, Goldsmiths building downtown. And in order for them to get that building, they had to work out a negotiation, and they basically just assumed Goldsmiths' liability. So I think there is going to be a whole lot of swapping in the commercial space for people who's like, hey, if you have a good interest rate, why would we go through all these other people? Let's just work together. I sell you this and we're done.
Yeah, I mean, that's one sector of the real estate. I mean, you have restaurants closing down. You've got all these companies that are going belly up, and you've got you're going to have these idle, and we do. If you look at malls and strip malls and everything else, because people, again, just don't have offices anymore, that kind of thing too. I can't see how they're going to get through this like they want to, which is what they say, a soft landing. When you combine all three of these, just bits and pieces of all three of these.
Yeah. I have one more thing to say on top of that. Just for commercial, they are like, I know they did this in New York. I know they've done this a little bit in California and a little bit in Houston.
Basically, I always think of San Francisco and New York.
Mixed floor plans. If you can't get corporate to buy, turn into condos and HOAs and all this other stuff, and you still get people in, because I don't think at the end of the day, you just don't want to wind up having to pay a huge note for property and you don't have any income coming in. So you'll figure out a way to make money or to make it float. And if you just sit on your laurels, you will not make money and you will have to close up. Not sure if you heard, Wolf Chase Mall is closing.
Yep. That's another one. That's a big mall here, for people who don't know, in Memphis, that basically replaced the old mall, which was the mall, which is the mall in Memphis. Yeah. Oak Court Mall too. It's still, I bet it's barely hanging on, but there's just these big malls are struggling big time.
Yep. And July 1st, Cheesecake Factory's closing, and Macy's and JCPenney are pulling out.
Buckley's, which is a huge steakhouse here in Memphis, is also closing. That's one that just got announced. So it's kind of scary. And all this stuff happens in the summer months when people are on vacations and they just kind of take care of business. Kind of like when they announce stuff on Fridays during the year of stuff they don't want people to hear.
You need to borrow my hat. I can bring it over there. I'll be right there.
No, I have a tattoo right here. You just can't see it. It's underneath my hair. It hurt too to do that. Okay, last, we'll just move on from that, but still kind of there though, because it's this debt that we're starting to pay on. it is gonna go to, what did you say, Daniel? Daniel does a lot of the writing here, by the way, of almost 2 trillion.
Yeah, so I am the resident fact collector, and the federal budget deficit is expected to swell to 1.9 trillion this year, when the original estimate was supposed to be 1.5.
Excellent.
Just a tad outside.
Yeah, only like, almost like, what is that, like 25% more?
Yeah. But did it keep up with inflation? Did it keep up with inflation? Did it keep up with inflation?
It depends if you believe the inflation numbers,
Are they supplying them?
Are they constantly changing, manipulating, and changing the definition of things?
Wait, you can't say that. You're institutional.
Hey, welcome to our side. Surveys and polls. Boy, I've done so many posts about how I just really believe in those. And that there's no possible way.
Know like this, the surveys that I don't understand. It's gonna be just real quick side quest. Is that like who fills out these polls for like which president they're gonna vote for, like well before it happens, and like it's like Trump's moving down in the polls. I'm like, who the hell responds to those things? Like who like where do I even take that? Like who wastes their time with that?
I swear it's like boomers like getting these from magazines or something, because I not one time have ever been asked to take a survey about anything that's even kind of remotely important.
That's my thing. It's like, can we start posting specific numbers on these surveys and polls? Because I mean, even the ones that the Fed releases, everybody releases at a governmental level, is a survey, and they present it as fact, and then they go back and then they have these updates to the previous month, which sometimes are absolutely way off. And how can you continue to believe in these things? And what I was getting to is like, why don't you post numbers? All right, we took X amount of number of people out of this zip code. We took X amount of people. And these are the non-people who haven't responded the last 8 times. And I mean, we got to have some transparency if we're going to believe in these things. Otherwise, it's just for entertainment only.
Darren, then the thing is, like, anybody with half a brain would look at that and realize it's bullshit.
Yes.
And they wouldn't have anything to talk about.
To be blunt,
right?
Yes. A
little pixie dust. A little pixie dust.
It's like I remember one time
let's call it narrative dust.
The news as a kid, and it was saying that like more millennials live at home than like any other generation. It's like, well, yeah, if you look at it, millennials are the young people who would live in their parents' home right now. Like that stat makes perfect sense. I was like 10 when I saw that. I was like, this isn't news. This is a dumb statement.
Hey Daniel, when do your parents get home? By the way, I was looking at the background.
Around 7.
If he suddenly has to go, they're home.
I told you to get off my computer.
My mom said she's going to be 15 minutes late, so we have about 14 minutes left, guys.
Let's hope he doesn't get grounded. We can have him back next week.
She doesn't know I'm in Singapore with my VPN,
Wait, she sees that bill.
Last thing, by the way, on the surveys, I mean, how many people don't answer them? I mean, you get a call, and then is the type of person that might decide that they think one way or another is also the type of person that will not answer a survey and hang up. I mean, it's just so many questions and no answers. Anyway, that's my last thing on that.
Okay, coming back from our side quest, my last fact is that national debt is poised to top 56 trillion over the next 10 years, or 122% of GDP. So in other words, our debt is more than our GDP that we have. And this is to surpass the debt to GDP ratio we had in 1946 after World War II, which was 106%.
Wow.
Yeah, you just remember back when like early 2000s when we were super concerned about the possibility of going from like 3 trillion to 4 trillion in debt, and the whole world was up in arms. The whole entire United States was up in arms about it, and it was a big election issue. And now we're 10 times that.
10, yeah.
I think it was after. It was either Bush or after Bush. It's just like the spending every year by every president just gets astronomical. Like, there's no like, it's not relevant to party like, or the agenda. It's just like, oh, they spent this much last time, like I can keep doing this.
That's exactly what it is. No accountability. Yeah.
Believe in like modern monetary theory, then like of course you think that's irrelevant. But I personally, I think the data shows like if you go, it's either 120 or 150%. Any nation that's ever gone like over that debt to GDP ratio has never recovered, which like, not conspiracy theory, but if you look at like historical trends, that falls in line with America's downfall of an empire. If you look at like past empire downfalls and how they happen, if, you want to look into Ray Dalio's changing world order. So I don't think it'll affect me, but my kids probably.
Thus says the person from Rome. Be careful.
Be careful. That's all they said.
This, that's a really bad summary. Yeah,
it's a bridge and brief to the point.
Beware the fall of the U.S. and just
they did invent indoor plumbing, right? So there's probably a lot of times like, all right, it works, but like, be careful. Like, don't flush your toilet paper.
I was gonna say
that's Splash. That's Splash.
They invented the pee things, right? Where you just went anyway.
Journals?
Sorry, I guess the elongated ones where you kind of come up like a trough and you just all pee in them. I think they.
That's an aqueduct. Yeah.
Well, yeah.
Aqueduct. Thank you.
No. Ew, we're peeing in our aqueducts.
Interesting fact. They used to actually collect that, and they would use the ammonia from the urine to actually clean the streets, like the cobblestone streets.
Nice.
I'm sure it smelled great.
That's why Paris smells so great. Oh wait,
I was thinking Paris too. I swear I was. Paris in the springtime. Oh, gross. This is what happens when we run out of subjects, but we have not actually run out of subjects. We have a very important one, which for the last 2 weeks has been very important, and it's important once again, which is wager. Let me pull up the scorecard. Oh, look at that. I won again. That's 3 in a row. I'm going for the 4-peat next week. Royce has the all-time record at 5 in a row, but this was on Oxy, and Oxy pretty much stayed right above the middle channel that we had, which was right above 160 to 162, I believe. See, I know all the facts when I win.
Of course, pay attention.
And it shot up to the 163, came back down close. Did it actually get into your zone? I think it did. 160.
It did once, and then basically dipped right up out of it. Because I asked them, like, what's the area? And they're like, well, right here.
These guys watch it like a hawk, man.
He even called it. He said it was going to hit.
Literally only Tuesday forward. The rest of the week, I don't care. But when it's getting close, I'm like, okay, where does this guy need to get over? And it's physically possible for it to get there.
It's like baseball in October.
I saw that there was a support line sitting at 62.28. I was like, dang it.
I mean, to your credit, you almost nailed that bounce to the penny.
He did call it. He called it
3 cents off.
And yeah, absolutely. And it hit that line that he called last week. If you don't believe us, go back and look at last week's after the bell, and you will see that the algorithms and the analyst here, Mr. Royce, called it exactly right. Basically, I mean, when you look at statistically, it was exactly right. We'll say that. And then it bounced off and came right back up into my neighborhood, and I won again. So, Royce, you have. Wait a minute. No, Daniel, do you have a stock, or what do we decide on for next week? What stock it was going to be?
I don't know. Are you going to keep poo-pooing on a firm? Or... Here, Darren, I'll do you one better, Palantir.
No, let's stay with a firm.
A firm?
All right. So we're going to do 2 charts here, Royce. We're going to have you're going to have you do you have a firm pulled up or no?
I have it now.
Okay, then we'll move over to the to your crayons, and then we will the second crayon actually. The second, because you had another crayon too. So we'll just do these 2 charts, and then we'll have some parting thoughts. So here we go. And we are over to boom.
So I see a firm holding. Talking about
it. You need to find a channel while you're doing it, I guess, for us, because
I already found the channel. I already know where it's.
Okay, cool.
All right. Cool. So we're sitting between $27 and $35 roughly is our channel, and we're getting that by just looking at our dashboard. So no calculations required. The 7 time frames that are below where we currently are, the 4 hour all the way down to the 1 minute. Basically, they all get a vote on where they think the top of each band on those time frames are, and then they'll get a vote on where they think the bottom are. And from that, we gain about a $27.50-ish valuation all the way up to about a $34, $35 valuation, with the only outliers being the 5 minute chart, which tends to get up to 36 or 26. Right? So from there, that means we have at least about, if we take from the 27 to the 34, we get about $7.50. If we take what the outliers, we have about $10 spread on where we think it can go.
Okay, so we don't want to know your opinions yet on where it's going to go.
That's why I stopped. I didn't talk about.
Yeah, I know. It's like you don't want to give it away. Yeah, and loser goes first.
How big is the range I get?
It is okay. I've got it.
It's $10 range. If you want to go with the $10 range, it's 36 to 26. If you want to go with the $8 range, it's about $27.50 to about $34.50-ish. It's
27, 29, 29, 31, 31, 33, and 33, 35. It makes it easy. There's it's 2 per. It's 4 of us. We get 2 each, and then the top end gets above and the bottom end gets below, if that makes sense. So
all right, so I'll go from the current price and then down $2.
All right. So are we counting after the bell the 30.94 or from the 31?
You got to be in that channel. 31.33 or 29.31.
Let's. I don't. What have we been doing before? Has it been like the close or the post price?
It's been the close price.
Yeah,
I always do keep it consistent and go close. So 31.41 down to 29.41.
Okay, so you want to make it difficult and do all the simps and everything. Okay, so you said 31.
Okay, I can do 31.50 to 29.50. Is that better?
No, that's all right. This ape can handle this. So you said 31.49 because I know that's where you're about to go. 31.49 down to 29.49.
No. It closed at 31.41.
41. Okay, that's what I was. Okay, 31.41, and then you have a $2 range down. I know.
Yes. So 29.41.
Yep. All right. I got to go last. So who's second? Oh, this is a close for second here. We'll defer
I'll let Josh go.
No, we'll defer to the bill payer. We'll go that pays our bills, or at least a couple of us.
See, but then you know where I think it's going to go if I go.
Oh, he doesn't want to give it up. Okay, so he defers to the gentleman from the bank, Josh Morgan.
I have to do this with my hand tied behind my back. Give me the lower range, like what was it?
27.41 to 29.41.
So it'll be 29.40 to 27.40.
I love it. Yeah, let's do that.
Basically, it's below 29.40 now.
Yeah, I'll take the 29.27 range.
Okay.
All right.
29.40 minus.
All right.
Because it's kind of broken through several layers of support, and it's on its last leg. So
don't give commentary.
Hey.
Okay. All right.
Hey. You know too much.
Royce doesn't need it. Yeah, I was gonna say he doesn't need it anyway.
All right. So now I'm up.
It's you.
All right. Everything below 27.40.
No, you can't do that.
No, sorry, that's my pick. Remember, I have a cup that says Papa Bear, which means
that changes
in the bear market. I'm almost always on the bear side, especially if the chart's supported. Look at all that red probability,
especially if Daniel picks it.
It's freaking Yogi over here.
Look at this. You see this? You see all this red?
On your hat?
Well, no. I'm just saying, we kind of changed the channels midstream now, but
yeah. Right. And then the larger time frames are all saying, yeah, we crossed underneath our RSI lines. No. Right.
And it's still got Compass and Momentum still have a ways to go before they even touch that mean line. Like,
all right.
Yep. And for them to get there, that means it has to go lower. So let's go.
All right. Well, obviously I take the above 31.42 and above.
No, Darren, you can have all of it.
Which means we didn't even. Which means we didn't follow the channels we said before. That's okay.
That's okay.
It's all right. I'll live with it. I'm gonna go buy some.
We'll just massage the rules for a couple of times.
Like I said, he pays the bills. All right, so we're gonna go to you are going to do a firm now. So let's talk about a firm.
All right, this is a firm, but I also want to show you guys something else that's going to be scary. All right, ready? So what we love to talk about and not love to talk about, let's go talk about Bitcoin for just 1 second.
I know what you're talking about. We love talking about Bitcoin.
Can't see Daniel's face, but I'm sure it's big smiles.
You see that? That's the compass crossing underneath that mean line of the Apocalypse band. Which, by the way, crossing underneath is like crossing like the 2008. Anytime that blue line and that red line cross for the center of this guy, that's bad news. That's horribly bad news. And to make it even more enticing and yum, look at this. The Infinity Band, first time since the rally that began all the way when it was sitting at 26, 25,000. It's the first time it's back underneath that line. And that happened this candle right now that we've been talking through.
And you're on a 4-hour, right?
And I'm on a 4-hour.
Yeah, that's bad.
So what you said about the debates might be right. If you go by this.
I got nothing.
Everybody check what's Russia doing to Thursday night. All right.
But basically, to also be fair, looking at the Z Pro, it's sitting at 80%. Sitting at 80%, that means there has to be a little bit of a bounce. So what I'm expecting is basically over the next 2 days, maybe, which puts us right at the end of the debates, by the way. 62, we should make it back up to 62-ish and then fall like a brick.
Okay, because it's been doing that for sure. A little channel action.
Yep.
I see that. Because it dropped below. I see already.
And basically, guess what? It's next support line because I turned on all support lines to be able to see this, right? So we got the purple, we got the pink, we got the red. It's below all of those guys already. So with that being said, its next support line, Bitcoin doesn't even have any support until it reaches 50,000.
Yep. That's a number I keep hearing from you, I think. And that's if someone had these tools, they could do a lot of damage with when to jump in and jump out and all that good stuff. So there it is again. 12 algos.
Hold or run. That's what you want to do.
There you go. All right, let's jump over to Affirm.
All right. What? Okay, Affirm. Let's go take a look. AFRM. You sure you want me to do PLTR?
No.
All right.
Wait, why don't you have him do Carnival?
All right. Carnival.
Ready?
Well, give Darren some meat for today.
Meat?
Well, I will say,
all I want is crayons. All I eat is crayons.
I will say that basically it's been on a tear, and that's a good thing. It's been basically on a 4-hour time frame. It was able to shrug off running out of space. So this is the Infinity Band. So that red line getting to the edge of the blue up here, it was able to shrug that off, go down, basically almost touch the mean back down at $13, and then lift itself back up again. The cool thing is this guy could potentially make it all the way back up to $23. The bad thing is at the rate at which it's going, probability is stretched hard. Anything above 70%, this guy's 81, 86, 96, 86, means there's going to be somewhat of a pullback. So basically, if you see it somewhere around 17.10, that might be a very good opportunity to pick some up for a longer term hold.
Yeah, it was right after the earnings. It was really good, kind of unexpected numbers that happened. And then you get the
and it is summer. I mean, hey.
Yeah. And they do this in the summer outside of COVID. This is what happens in the summer every time. It's very predictable. It's just that this jump.
Also, also like beer. Well, you want to buy beer? Buy Bud. October never fails. November, December. You got New Year's coming. You got Thanksgiving coming. Yeah, people are buying beer. It just makes sense.
Almost like it's programmed in.
Yeah, all right. That off. That's gonna drag all those lines down. You're gonna have.
Also, this is something else to consider, and this is
I don't.
Okay.
I got to go back.
What happened?
I have to go back. Anytime you go to the chart, I got to go back.
Okay, gotcha.
Are you looking something up?
Am I?
Yeah.
Oh no.
I thought you were gonna do another chart. Okay, so
no. Not gonna do another chart. We got the carnival. I'm going to speak a little bit more about carnival, just a little bit.
Okay, this is the time to do it.
Meteorologists think this is going to be the worst hurricane season in the last 120 years. So with that being said, because of the additional heat and the water temperature, it makes the strength of hurricanes that much stronger. So it may not be a good idea to be out on the water in late August. So you think you get cheap tickets for Carnival, you might not want to be out there.
October is usually the best time for rates.
How bad were the hurricanes 120 years ago?
There was
were they really bad or?
No, they were pretty bad. I mean, like, you guys only heard of like Katrina and there are a few other ones, but like
that wasn't 120 years ago.
Talk about Betsy, Hugo. I'm from Louisiana, so we remember the hurricanes quite well. But like Betsy was, I think, bigger because I think Katrina only wound up being a Category 3 when it landed. Betsy was a Category 5 when it touched down on land. So I mean, you're looking at 180 to 210 miles per hour winds, and basically paper sticking inside glass. It's just that fast, right? So with it being the swarm, it's the storms, lots of thunderstorms, because basically hot air meets cold air. You get lots of arcing lightning and basically discharge from the clouds, and then basically that just feeds the storm, make it stronger. And yeah, it could be a very, very scary time to be on the water in late October, early September.
So go ahead and expect oil to shoot up if any of those enter the Gulf and go up towards Texas. We get this every time. When those hurricanes come in through the Gulf and they might wipe out Gulf oil, then that's when it starts going crazy. So, I mean, the narrative is
buy the news, sell the event.
Yep, that's it. That's it. All right, guys. Go ahead.
No, and just for Carnival, if you want to pick it up, look for about a $14 valuation.
Gotcha.
So that's what I'm saying on those charts. So
the institutes are gonna because there was a lot of shorts in that specific stock, so I expect that's a little bit of the jump too, and then it'll come back down to port, if you will. Yeah, sorry. We've covered a lot. We actually covered stuff that we didn't even have on the agenda today. Appreciate you guys. It's kind of fun. I mean, having 4 people, we didn't talk over each other a whole lot. It'll be interesting to see what our little clips look like and what it brings out, like you said before. But thanks everyone coming in. We have an international crowd here, and hope to see you guys next week on After the Bell.